All right, we are back with the fully funded show, this time with Joe Fairless. Joe's actually one of the first people kind of followed in this space too when I first started in the syndication and capital raising kind of fund multifamily type world. And Joe, thanks for coming on.
Hey, looking forward to our conversation, Sam.
Yeah, and I'm sure a lot of people listening here who follow multifamily, know who you are. But for those who don't, would you mind kind of giving us some of your background?
Yeah, sure. I am from Texas originally, moved to New York City, went right out of college, was making $30,000, had about 20K in student loans, and those numbers don't really work well to save money. So I climbed the corporate ladder as fast as I could, ended up becoming the youngest vice president of a New York City advertising agency. Along the way, I realized I wasn't fulfilled by what I was doing and I wanted to make a change. And so, one thing I did around 2009 or in 2009, I bought a single family house for $76,000 in Duncanville, Texas, south of Dallas, while living in New York City. And then I bought another and another, and I ended up buying four total over about 3, 4 years. And I bought those from saving up my money and from my W-2 job. And I realized that on my spreadsheet they were making about $250 a month, but when someone would move out, then there'd be move-in expenses to get the home ready. That 250 a month ended up getting wiped away, and I realized I need the scale because it wasn't providing the cash flow, the monthly cash flow that I thought it would be. And in order to scale, well, I didn't have the cash to buy a large apartment building, so I realized that I need to raise money and buy it with other investors, and so that's how I got into apartment syndication.
Yeah, I mean, for anyone listening to like 30K in New York does not get you very far. I grew up in Brooklyn
No.
myself too, and the rents are crazy. Living is crazy there in terms of your price point, and even though that was a handful of years ago, just there's no way for survival there. And I think you took a pivot that a lot of people do, right, myself included, starting in single family because it's all you really know how to go do, right? You're buying houses one by one. You look at the numbers on them too. It's a massive time suck for very nominal cash flow. So when you start looking at that business and seeing, okay, I have to go have probably hundreds of these houses to get to a place I wanted to go do. Where'd you go next? And kind of what was that process for you and kind of figuring out the direction you wanted to go?
Well, I did what I call sample life experiences. I started teaching a class on how to do what I was doing because my friends in the advertising world that I was working with, they asked, aren't but you own homes, but you're working with me, and we're working 9 to 9 every day. How are you doing this? And so I thought, well, I'm going to teach a class on the weekend. So I started doing that. I also wanted to become um, better at public speaker. So I took improv in New York, and I think it's Upright Citizens Brigade. I think
Okay.
in New York, and then they in the class they said, "Well, what are you doing this for?" I said, "I just want to become a better public speaker." They said, "Well, you should do stand up comedy because improv is a lot easier than stand up comedy. The audience gives you a lot more leeway with improv." Because you're seeing that object for the first time, so it's tough. But with stand-up comedy, you've got to come with a rehearsed act, and you've got to make people laugh every 7 seconds. So I said, okay, fine, I'll try stand-up comedy. I was terrible at it, but I did the class. I took the class, and I performed. I'll use air quotes at Gotham Comedy Club and another place in
I
East
was there two
Village, which
weeks ago.
Gotham Comedy Club.
Yeah, yeah, yeah.
Nice. Yeah, yeah. And then another place in East Village, which is now shut down, to give you an idea of the caliber of performance that I had. And I did those things, among other things. I interviewed people uh, about how they became successful in their career, and I sampled different things. And I realized that real estate was what I really wanted to do. And so I doubled down on the class, and I had someone who was my former boss at the time. And he said, this single family house stuff is interesting, but if you ever do something larger, let me know. And I thought, well, wait a second. Do I have a customer before I have a product? Yes, I do. I have an interested investor who is interested in investing with me, but I don't have the apartment building. I don't have the larger property yet. So that gave me the confidence to go out and find something. Now, this investor was interested at most for $100,000, which is a significant amount. But when you think about how much it is required to buy an apartment building, not as significant. So, you know, I didn't have that perspective back then. But when he told me that, I thought, okay, well, I'm going to go look at apartment buildings. And so I started reading a bunch of books, uh, and I had been reading a bunch of books, but I continued to read a bunch of books, and then reach out to brokers. And I actually had picked Tulsa, Oklahoma as my market, but I couldn't find any properties there. And then uh, I was introduced to someone who had a deal in Cincinnati, Ohio. It was a 168 unit deal. So clearly out of my equity range that I could raise, I thought maybe I could raise uh, about about $300,000 to $400,000. And with this deal, it required me to raise about $1.3 million, which was astronomical for me. Someone who hadn't raised any money before, and I ended up cobbling it together through 12 different investors who I knew through different stages of my life, from being on my flag football team at the time in New York, to being on the advisory board at Texas Tech with me, to colleagues of mine, former colleagues in the advertising industry. My roommate at the time, who I met off Craigslist, he invested with me. So, there are all sorts of people who invest with me on that first deal. And, that's how I got going.
I'm still stuck in the Gotham Comedy Club. I lived in New York growing up, and I actually lived on 10th and 23rd this past summer for a few months in Chelsea, which is 2.5 blocks away from the Chelsea Hotel where it is. And those people at the going to the shows are unforgiving. So good for you for going out and doing that. That's not an easy audience to go up there, and
Well,
yeah,
and I will say that it was I performed at the club during a time when others who took the class also performed.
gotcha.
And
Okay,
so
okay.
we had a friendly audience, because we were encouraged to bring as many people as we knew to attend. That way it would be a friendlier audience. And so I had at least 5 people who were screaming and laughing at stupid, not funny things that I was talking about.
No, it's awesome. So I have a similar story too. So growing up, I used to have a horrible stutter,
Mm-hmm.
and my mom, instead of doing speech therapy, she's like, "You should go do public speaking." And mind you, I'm like 7 or 8 years old, right? Pretty overweight, And it was a horrible experience, but it's also too like nothing's been worse than not going up on stage and not being able to go speak in front of hundreds of people. So really good experience in terms of doing it, right? So like your baseline for what's uncomfortable just
Wow.
goes up significantly.
Seriously, wow. How'd that turn out for you?
I can speak better now than I did before. The process of getting there, I've definitely had better experiences, right? So like you learn a lot about yourself and a lot about people around you and doing it, and you get comfortable, right? Which I think is a
Uh-huh.
huge skill, like you're saying, and be able to go have those conversations, talk to people who you feel are above you in certain circumstances, right? And just get really comfortable because your baseline of nothing's been worse than that, right? It's like once you're over that,
Mm-hmm.
you're in a good spot.
Mm-hmm. Wow.
So for you now, right? Like I love the process you did in getting to doing that first deal, right? Like
Mm-hmm.
that's such a great experience because your first deal, you are scrapping to get investors from wherever you can. Right now, your brand probably produces tens or not hundreds of millions of dollars a year of capital that comes in right from the systems, process, people you built around you. But at first, like scrapping that first $1.3 million is probably harder now, harder than doing a deal now for maybe a 20, $30 million equity raise. Like, how is that transition you had in doing so from going from super scrappy startup, right, transitioning out of your job potentially, or in the
Mhm.
process of leaving your job, to building a more sustainable, scalable business?
It was bumpy. It's that's how it went. I'd say that there are a lot of things I learned along the way. One of them was that I'm unable to do it by myself. On that first deal, it lost money, and I paid back my investors plus 14% return out of my own pocket over 2 years, 2 or so years after the deal closed. I paid him whatever I could each month, and it took me about a year and a half or 2 years to do it. And from that first deal, I made every mistake in the book that I could have made, from not understanding the difference between physical and economic occupancy, to um, not realizing that when we were doing walkthroughs and due diligence, that the owner before the walkthrough, because he was a really hands-on owner, he was spraying some sort of clear liquid on his legs and shoes before he went into the units, and I don't know what that was, but turns out it was rubbing alcohol, because there were a lot of bed bugs in all the units, and he didn't want bed bugs to latch on to him as he was walking through the units, and me not picking up on stuff, and then afterwards, having units that have all these bed bugs and needing to get that addressed, which is expensive, relatively speaking, based on, compared to the rent that is being paid,
Sure.
and other things too. Renting from the owner saying, "Well, hey, we're 93% occupied. Would you like it to be close to 100% occupied by the time you purchase it?" I'm like, "Yes, please." And so what he was doing is there were down units that needed a lot of work, and he worked with the homeless shelter to then get people into those down units, and so it was occupied whenever I took over, but then they don't have the means to pay whenever I had the property, and then we had to evict and still have to spend $10,000 per unit to get that unit up and running, and it was just all sorts of rookie mistakes, all my fault, all because I messed up on multiple fronts. And so I realized that I have experience, I have a skill set, but it is one skill set of many that are required to be successful in this business. So I partnered up with someone who had that skill set. After that deal, I partnered up with someone who had the skill set that I and skill sets that I did not, because you need someone in the business, in your company, that knows how to do asset management, knows how to do due diligence, has done it many times before. The partner that I ended up partnering with had done it 10 years, approximately 10 years of acquisition and asset management of multifamily properties before we partnered up. So that was one big lesson that I learned from that. Another is that, and one mistake I see people make, and I know some of your audience members are people who are either looking to break out of their W-2 job and do this full time, or are looking to scale from an equity raise standpoint, or scale their business. And one thing that I see a lot of one mistake I see a lot of people make is that they jump into partnerships, and with the wrong people. And something to look at before you jump into a partnership with someone, something to look at is, um, have they successfully done what their role would be in their partnership with you? So, for example, if you're really good at raising money and you need someone who has operations, asset management experience, and acquisition experience, have they successfully done that for multifamily properties, assuming you're doing multifamily, for multifamily properties? because you'd be surprised by how many people partner up with someone who does not have that specific experience for the role that they'll serve. A lot of people might say, well, they were really good at acquisitions for mobile home parks, and they're looking to make a change, so I'll partner up with them. No, that's not a partnership, because they're going to be learning on the job. And if you bring on a partner, someone equal to you, you want them to be able to teach you what their area of focus is. They should teach you all about it because they are bringing that level of expertise. A lot of times when people have partnerships or seek out partners, they end up finding a very expensive intern or a very expensive employee, because they're having to teach that individual, or that individual's learning on the job. And so qualify a partner before you jump into a partnership by simply asking the question, have they successfully done this specific thing? And when you ask that question, then you'll probably weed out a lot of potential partners.
Yeah, and it sounds simple enough too, right? I think you see a lot of people jump into partnerships just because they get excited, right?
Mm-hmm.
And they want to go move quickly. And I think it's a really valid point too, right? Going slow to go fast is really important, right? In terms of
Mm-hmm.
taking your time to understand, is this person the right fit? Do they have the competency that we need, right? And, can it be a long-term thing? On
Mm-hmm.
your end, for someone who's kind of starting out or looking to go scale, do you view partnerships more on a deal by deal basis? Do you view them as a kind of forming a company together? At what point does it make sense to go all in on a partner in that sense as well?
I would test drive. The beauty of real estate is that you can test drive your relationships on a deal by deal basis, and that's what I've done. When That's what I did when Frank, my current business partner, and we've been partners for almost 10 years now. Um, when we started out, it was on a deal by deal basis because we uh, hadn't done deals together, and so you don't
Sure.
know how people are going to act. You don't know how the communication style is going to go until you actually get into it, and you really don't know how things are going to go until you get into some challenges, because everything's great until there's a challenge, right? And, everyone's got a plan until they get punched in the face. So that's ideal, to go through multiple deals and go through the challenges of the deals before you you know have a formalized partnership where, okay, I have my company, you have your company, let's merge, let's go under one roof.
Sure. And now that you guys have scaled quite a bit, I believe you're what, 3 billion or so under management?
Almost.
Yeah. So that's a lot of properties, a lot of deals, a lot of growth in the last handful of years. What's that process been like in terms of what key hires have you made? What learnings and things would you do differently? Right, especially managing things through COVID and more of tier one markets that you guys are in as well. Right,
Mm-hmm.
how do you look at how that's going to impact your business or things you do differently or just learnings you've had in that process?
The first hire was an assistant, and I credit Gary Keller's book, The Millionaire Real Estate Agent, which I've never been a real estate agent, but I read the book, and he wrote that your first hire should be an assistant to get the stuff off your plate, and I agree, and I embrace that philosophy. Um, and I think it was in this book. Yeah, it was in this book where he said that um, people aren't in love with you and what you provide. People aren't in love with you, they're in love with the service that you provide. So if you can hire someone who can provide similar or better service, then get the executive assistant, or
Sure.
get team members in place. And in theory, you should be able to hire people who can provide the same level of service. Obviously, there's always going to be a visionary role to the business that the entrepreneur, the founder, will have. But when you get into the nuanced tactics of things, that assistant was our first hire, or for my first hire. I'd say us creating a property management company was beneficial for the business, but very expensive to pull off because it takes a lot of money to put together, you know, the qualified team. But when you get to a certain number of units under management, if you can if you can create your own management company and you have the right capability to get the right team in place, then most likely you'll be able to manage your properties better than a third party management company, simply because you care more than a third party management company would. So that's another aspect of what we've learned and what we've come across. I'd say you mentioned COVID. That was that There's so much uncertainty associated with COVID at the time, but by and large, tenants paid rent, and so thankfully that was um, not as impactful as what it certainly could have been. Um, so those are some things that come to mind.
Yeah, and something as well that I want to discuss too is the conference you all do every year, right? One of the best conferences I've personally been to. We've been a part of the last few years as well. And how do you go leverage? How do you think about the conference as it relates to, do you kind of view it as an expense, right? Conferences are not cheap. Usually they are not profitable as it relates, and I don't want to speak for you, but usually they're not overly profitable as it relates to dollar in, dollar out directly. But the brand piece of it can be huge. So how has the conference, changed your business, and how do you all view it internally as it relates to the P&L side of the house?
It's just a Well, I'll say that I was recently speaking to someone, and he is he has a net worth over $100 million, and he's a software person, and that's how he acquired his wealth. But he built his own business and has done very well financially and also personally, and from a family standpoint, I would say in a lot of areas of life, he's done very well. And when speaking to his kids, as you can imagine, his kids have a think there's a understandably a large shadow over them, and that is their dad who achieved all this success. And what he told his kids is that don't measure your life based off of financial means or business success. Measure your life based off of the quality of relationships that you have, and it's beautiful. And if you think about it, if you focus on measuring your life based on the quality of relationships that you have, the other stuff's going to fall in line. It absolutely will. The quality relationships that we have, the conversations that we have, this conversation that we're having now, we don't know each other very well, but now that we've had this conversation, it strengthens a relationship that between us that we didn't have previously. And the conference is an extension of that philosophy, measuring our lives based on the relationships that we have, the quality of relationships that we have. I think at the end of the day, I volunteer for hospice, and speaking to hospice patients, what do they talk about? They talk about the memories they have with the people whom they love or loved. And what do they have around in their room? They have pictures of family members and or friends, and that's if you fast forward all the way to the end and you can see what you'll care about at the finish line, then why not focus on it when you're in the
Sure.
middle of the race? And so that's really what the conference is all about. And we recently launched the Best Ever Community, which is an extension of the conference. So it's a mobile app, Best Ever Community, and you download it, and uh, the members of the community are engaging with each other. You have to be a commercial real estate investor who has at least two deals. You've done at least two deals, or you have to be an LP who's invested at least one deal. So we've already qualified people in order for them to join. But so the ones who are there, it's high quality conversation and relationships that are being established. And I mean, that's the beautiful part of being a human being is that. So that's why we celebrate that when we meet in person. And you've attended, people who are there are humble, they're experienced, they want to be helpful. They are helpful, humble, and experienced. And to be around experienced commercial real estate investors who are generally humble and most of them helpful, that's a pretty special place.
For sure. And yeah, for anyone who's gone to the conference too, I think they can definitely echo that, right? I usually try to avoid a lot of conferences at all costs, but I think you all do a great job in terms of having great speakers, being set up really well too. And again, yeah, it's also just a great opportunity to get out from behind the screen too. I'm sure, a lot of my hours are spent on phone calls or on Zooms, and you actually lose that human interaction a bit too, right? From
Mm-hmm.
seeing people each day. So I think the conference is a great place to go get everyone in one place too.
Yep.
So before we hop off here, kind of what's next for you, and what advice do you have for the listeners as well as they look to make that pivot from corporate America or they look to go scale their commercial real estate business?
Mm. Well, what's next for me is we have a conference that we just talked about in March, and you can go to besteverconference.com to look at that. You going this year, Sam?
Yep, we'll be there.
Sweet. So Sam will be there. I'll be there. Um, and advice for listeners who are looking at leaving their W-2. Um, I would say I would suggest, and by the way, advice is always, when someone gives advice, it's typically based on their life experiences that they had and what worked for them and what they've seen work. So this might not work for you, but this is what worked for me, and this is what I've seen work for others. And that is, if you have a W-2 but you're looking to leave, um, get as far along as possible while still having that W-2 income to support yourself. And then eventually you'll need to take the step into full-time entrepreneur land. But you might as well enjoy uh, the the money from a W-2 income. Now, there's another school of thought: burn the bridges. That could work too. But more conservatively, if you take the former approach, that might allow you to live longer because you'll be a little bit less stressful, less stressed out. And as far as advice for people who are looking to scale their business, it's about the relationships and who you can call whenever you got issues. Issues come up. Who do you call? What type of relationships are you cultivating? That's why the conference is so beneficial. That's why the Best Ever Community, that app, just go to the App Store and download Best Ever Community. That's why that's beneficial. That's why your podcast, Sam, is beneficial to learn from others. But it's not just listening to what others are saying, it's establishing real true relationships and friendships with them. So that takes time. There are a whole lot of lonely individuals out there who are keyboard warriors, and as you said, Sam, get out behind the screen and go create real relationships and handshake, hug human beings. That's what it's all about.
Yeah, and a point you made too, I couldn't agree more. I think at times people want to go all in and burn the bridges when they have a really stable, great job that it gives them more longevity too, right? When you
Yeah.
look at taking that jump and nothing's built, your runway is usually pretty short unless you have cash from somewhere or something to go balance you out. But yeah,
Mm-hmm.
great points in terms of relationships really help in terms of deals, life success as well. So Joe, thanks for coming on.
Enjoyed it, Sam. Thanks, everyone.